So we've all seen the stories, right? The headlines about crypto millionaires popping up overnight, teenagers buying Lambos. It creates this massive feeling that everyone is getting rich from this stuff. But today, we're going to pull back that curtain. We're going to look at the other side of the coin and get real about why, for most people, that crypto dream just doesn't happen. You're scrolling through your feed, you see the hype, the crazy pixelated art, coins that are supposedly going to the moon, and you just can't shake that feeling. That serious case of FOMO. You start wondering, what am I missing here? What am I doing wrong? Well, let me tell you, that feeling is completely normal because the whole hype machine is basically designed to make you feel exactly that way. You know, for every single person who hits that 100x jackpot, there's this huge silent majority of people who bought at the absolute peak or got burned by a scam or just sat there and watched their investment slowly bleed away to nothing. The crypto world, man, it loves to shout about the winners from the rooftops, but it almost never talks about the losers. And that's exactly what we're going to get into today. So why does this happen over and over again? Well, the very first step is to change how you think about it. You got to stop seeing it as traditional investing. Honestly, for a lot of these hyped up projects, it's way more accurate to picture yourself walking into a massive, unregulated, worldwide casino. Think about it like this. On one side, you've got traditional investing. You buy a stock, right? You're buying a tiny piece of a real company with real assets, rules, and regulations. But on the other side, in the crazier corners of crypto, you're not really buying anything. You're just placing a bet in a game where the rules are murky at best, and you have absolutely no idea who's holding all the winning cards. Okay, so how exactly are the odds stacked against you? Well, it really boils down to 5 key things, 5 mechanisms that give the insiders, the house, a huge, huge advantage. We're going to break every single one of them down so you can see the game for exactly what it is. All right, first up, the information edge. In normal stock markets, insider trading is super illegal. In a lot of crypto, it's just another Tuesday. See, long before a project goes public, a tiny group of venture capitalists and these big players called whales, they get to buy in during private sales, grabbing tokens for fractions of a penny. So by the time you see it hyped on social media, they're already up thousands of %. And guess what? They're just waiting for you, the regular investor, to buy in. You become their exit plan. Your purchase is what lets them cash out their insane profits. And this information gap, it creates the perfect environment for scams to thrive. I mean, look at this number. In 2022 alone, almost $4 billion were just lost to them. And one of the most common scams out there takes perfect advantage of this whole situation. It's the classic rug pull. It's shockingly easy for some anonymous developers to whip up a token, market it like crazy, get a flood of regular people's money, and then, poof, they vanish. The code might still be there on the blockchain, but the team, the project's money, and your money, gone forever. Now, the second big problem builds right on top of that. You really have to stop and ask yourself, what is the actual value here? I mean, with Apple stock, you own a piece of a company making real iPhones and real profits. But with a lot of these smaller coins or NFTs, what are you actually holding? A lot of the time, the answer is nothing more than a good story. The hard truth is, a ton of these assets have zero underlying value. No cash flow, no real-world use. Their price is based completely on something called the greater fool theory. And that's just the hope that you can find someone else, a greater fool, who's willing to buy it from you for a higher price. But what happens when the hype dies down and the crowd moves on? The value collapses, often all the way to zero. All right, the third thing that stacks the deck against you isn't out there on the blockchain. It's right inside your own head. The crazy ups and downs, the extreme hype of the crypto casino, it's all perfectly designed to exploit our natural human biases. It literally turns our own brains against us. It's a total psychological minefield out there. You've got FOMO, the fear of missing out, which pushes you to buy when prices are at their highest. You've got herd mentality, which makes you follow the crowd, often right off a cliff. There's confirmation bias, which makes you ignore all the warning signs. And then there's overconfidence, making you think you're a genius who can't lose, right before you lose it all. The fourth mechanism is just the raw, brutal volatility. That same force that promises you these incredible gains can also hand you the most devastating losses you can imagine. We're talking 90% or even more, wiped out in a matter of days, sometimes hours. Your money can just vanish with breathtaking speed.
And that volatility gets even worse because of something called a lack of liquidity. Liquidity is just a fancy word for there being enough buyers and sellers to keep things running smoothly. Well, for a ton of these smaller tokens, there just aren't enough buyers. So when you decide you want to sell, your own sell order can actually crash the price, trapping you in a downward spiral.
And finally, we get to the fifth and, maybe the most important factor of all. There is no safety net. None. If your bank account gets hacked, you have protections. If your stock brokerage goes out of business, there's insurance. In crypto, you are completely and totally on your own. When an exchange collapses or you get scammed, there is literally no one to call. There's no FDIC insurance to make you whole. There's no regulatory agency to file a complaint with. In almost every case, the money is just gone. That's the steep price of playing on a decentralized, unregulated frontier. Okay. Hearing all of that might feel a little discouraging. I get it. But look, the point of all this isn't to scare you away from crypto entirely. The point is to arm you with knowledge. Because understanding how the game is played is the absolute first step to changing how you play it. Knowing that the odds are stacked against you, that's not a weakness. That is your greatest strength. It lets you stop being a gambler, just blindly pulling the lever on a slot machine. And it lets you start thinking like a real strategist. Seriously, when you truly understand these 5 mechanisms, everything changes. You start asking the right questions. You can spot the classic signs of a pump and dump from a mile away. You learn to manage that FOMO impulse. You can finally tell the difference between projects with genuine long-term potential and all the short-term speculative noise. So, what's the first step on that path? It's not about trying to find the next hot coin. No. It's about committing yourself to a real process of deep, independent research. Your very first smart bet is the time you invest in your own education. Here's a simple rule of thumb. Before you invest a single dollar, use the 10-hour rule. 1. Actually read the project's white paper. Does this thing solve a real problem? 2. Investigate the team. Are they real people with experience or are they anonymous cartoons? 3. Analyze the tokenomics. Who owns most of the supply? Is it all held by a few insiders who are just waiting to sell? 4. Check out the community. Is there genuine excitement or is it all just bots and hype? And 5, the most critical question of all. Be honest with yourself. How could this project completely fail and go to zero? And this, right here, this gets to the absolute heart of it all. Building real, lasting wealth has never been about getting lucky on a lottery ticket. It's always been about making a series of smart, well-researched decisions over a long period of time. You see, the real prize here isn't a Lambo from some lucky meme coin bet. The real prize is learning how to engage with this incredible new wave of technology, to potentially benefit from its growth, but to do it smartly, protecting your money and your future from just becoming another one of those cautionary tales. So, the question I'll leave you with is pretty simple. Now that you know the odds, are you going to play the part of the gambler, crossing your fingers and hoping for a lucky break? Or are you going to become a strategist, an investor who makes their own luck? The choice is all yours.